Hello, hello, hello. Happy Monday. Fed week, Fed speak. Everything's good in the world. Good morning. Good morning. Good morning. Good morning, John. Good morning, Ro. Good morning, Sterling. Sterling, looks like your vacation's over with all this news coming in here. Good morning, Patrick. Hope your vacation was fantastic. I assume it's over and you're back to the old grind. Hope everybody else who still gets vacation time. Boy, isn't this summer flying? It's almost, we're closing in on Labor Day. The summer's almost over. I mean, where's it gone? But we got to celebrate Jackson Hole Week first. Consumer credit card debt, new highs. Fed's cash and carry. This dual mandate that was one of the stupidest things ever. It should just be price stability. If you're going to have the Fed, because you can't, like, you literally have to slash rates, which still has a lag effect to even manage unemployment. Oh, you're trying to solve everything with one instrument. It's absolutely ridiculous. That's why it should always just be price stability. And if you try to save the labor market, you know, it's just gonna everything being proposed is gonna prop up inflation even more. And I don't see it below 2% yet, at least for the things you need, not necessarily things you want, but. Yeah, we got that. AMD's up. They're making a run to keep gunning with NVIDIA. What else do we have? What else? Oh, stop, Siri. I didn't talk to you. The weaker job market should open the door to September cuts. They're really, looks like they're gunning for those September cuts. Cuts for Kamala. Oh, boy. That's how it's going to be spun, at least. What else? U.S. economic growth to average 2.5 and 1.8 in 2024 and 2025. Look how much money the government's spending. And if that's all you can get for all the money you're spending, things are in really bad shape. What else? Anything else before we get to the markets? Glad you are not in Chicago this week. I'm glad I'm not in Chicago, period, anymore, but especially this week. Anyway, if you are living under a rock, it's the Democrat National Convention in Chicago this week. Seems they want to fund police for their convention. Other than that, they don't want to fund police. Hello, Charles. Good morning, McRangers. Can we look at Dell? Remind me at closer to the end. Thoughts on not trading too much until start of September? Well, we're in a lower liquidity market. We got a lot going on. If there's a valid setup, I don't have a problem trading these. But in these kind of markets, especially in lower liquidity times, like around the holidays, August, you can see it, especially in the daily volume. If you actively trade the futures, you can see it in the volume in each print going off in the bid ask and even the depth of market. They're thin. The way I handle it traditionally is I use the longer term setups. If I don't have a setup, especially in the higher time frames, there is no trade. I want to ride with the bigger setups. Remember, higher time frames are more important than lower time frames. So I'm going to identify the setups on the higher time frames and be very patient. And also, when you have low liquidity, when things start trending, they can continue to trend. Good morning, Anissa. Volume fell off today, less than 100K in the NASDAQ. The volume, if you look at even the rally, last week, and we can peek at that, it's been dropping off steadily. The volume's been on the downside. Okay, now you have the low liquidity. Doesn't mean this can't keep going. This can keep going in a low liquidity environment. Okay, but especially for shorts, at this point, since the probabilities have tipped that we could go, especially in the S&P, we could go retest the high area from mid-July. anything short has to have a very strong setup, and then I really have to manage my reward to risk correctly. So, doesn't mean if something comes out of the blue because in a low liquidity rally, something could tip it over really quickly, but you don't know if or when that's going to happen. So you got to trade the setups. Today, we got Waller. We already had Cash and Carry, Kashkari coming, speaking. We got Waller speaking. Then we got this consumer board leading index month over month, still expected to be in contraction, and we just had the bill auction. Tomorrow we got Red Book and some more Fed speak, but this is really Monday, Tuesday have very little. Wednesday kicks off Jackson Hole, and we have the FOMC minutes from the last meeting. But other than that, you got mortgage and applications, crude numbers for the crude traders. Thursday, you have Jackson Hole still going on. You have jobless claims as always. Kansas City Manufacturing and Composite Index. But again, everything's going to be focused around the Jackson Hole. Because you got S&P Composite Manufacturing and Services right after the open, 15 minutes after the open. But, that's going to be more minor. And Friday, you have Powell speaking at Jackson Hole. New home sales. So this overall, besides Fed speak, one set of minor numbers, really these S&P manufacturing and services numbers, and FOMC meetings. It's mainly FOMC meeting minutes and Powell speech. It's mainly Fed focused this week. Fed focused. So keep that in mind. You have AMD up on their it was up. It's pulling back a bit on their acquisition. What's going on with Intuit? Google running a bit. Sort of a mixed morning. We're very overbought on a short-term basis, but remember that can just lead to a pause, as I talked about last week. Let's just refresh this. Comm services based off of Google running is the leading sector. The only thing negative is real estate. Fed Watch. I like this new aggregated tab too. This is is it a tab if it's on the side? I don't know that. But still, one rate cut September, another one November, and then favoring still a double cut in December. So that's saying 100 basis points of cuts. If they're doing 100 basis points for cuts in 3 months, something's falling off a cliff. Okay? I'm not saying it can't happen, but boy, if the market's going to celebrate that, it's celebrating the wrong thing. This is such a schizophrenic market. Still in the middle of fear mode. Schiller PE climbing towards 36 again in the uncheap, low volume, low liquidity market. In terms of earnings, Palo Alto after the close today, Lowe's is the big thing tomorrow morning. Toll Brothers in the afternoon. Then Wednesday, you got Target, Macy's, TJ Maxx. In the morning, Snowflake and Zoom in the afternoon. Again, nothing really market moving by itself, but some of these can be interesting, like Lowe's and Target and Macy's. After the close on Thursday, nothing, not much. And Friday, really nothing. So it really tapers off going into Jackson Hole Friday, Powell speech. What else? You hate the heat? Well, then don't come to Arizona. I hate the cold. Can't stand it. Would rather be hot than cold. So that's where we're different. We seem to be on the opposite sides of a lot of things there, Coco. Yeah, the U.S. continues to spend if we're in a major crisis. The Fed is calling for a soft landing, and the economic data is strong. Something clearly does not add up here. Just like I skipped over, you had those million. They're going to redo. Where was that? Redo the employment numbers. Are going to ratchet it down by 1 million. Where was that? I saw that in here. You had that, and I was going to comment on that. Here we go. We can't even trust non-political government data now. Wednesday, Bureau of Labor Statistics will downward revise jobs for April, March April 2023 to March 2024 period by up to 1 million. Just leaving it at that. Thank you for posting that, Sterling. Okay, we talked about volume. You can see on any of the sell-offs, look at the volume, and then look at this. I mean, and if you even compare it, I mean, we're at this low volume at a bunch in May on the little. See, you can still rally when the selling pressure dries up. Volume picked up a bit in June, dropped a bit on the rally, but this is still not a high, besides even on the big reversal day of the 8th, it wasn't fantastic volume. It was decent, but then it's really dropped off as we've climbed sort of up the wall. Remember, magnet price is 56.46, the area. All right, my key support coming into this week is back at 5,500 to 5,505. Rising rotation zones at that level. You have a prior key support there. So that's the key area I'm watching on any pullback. There was also the prior 62.5 level. So that is what I am watching on any pullback, which pretty much to me would be a sideways still correction. You see, overbought, pinned at the top. So that's what we're watching for there. On the push higher, I'm still focused on that 56.46 area. That's still the magnet price. So there's not much else to talk about there. There we go. Turn that off. Besides short-term trading, and this is going into, it's all going to be related to because the Fed can say anything, and any Fed speaker could say anything now. If they keep pushing, we got to talk about the cuts. We got to talk about the cuts in September. We got to talk about the cuts in September. They're not fully on the table. Then you're probably going to get the cuts in September. At least a single cut. NASDAQ, overbought, cycles at the top. My key pullback level on the NASDAQ is this 19,200 level. 19,200 is where I'm focused on any pullback, which would still be a sideways correction for me, not really a big pullback correction. We, in terms of the 62.5, did not close above it on Friday, just below it, so the probabilities have not tipped. If they tip, the next key area I'm watching before the 87.5 is the 75. Why am I paying attention to this? There's some pretty key resistance up there, and that also takes us into potential double top territory, which the S&P already entered. Does not mean that might ever trigger. We could just keep marching along higher. But I'm really paying attention to that now, because if these markets end up potential double tops and we do roll over going into September, October, could get very, very interesting. But until then, we have not shifted the probabilities in the NASDAQ yet. Might change today. Remember, key pullback 19.2. The Dow closing in on the 75. Still the magnet price on the Dow is 41,281. Very key support coming in. I'm watching this area around 40,000. This area right around in here, 40,400 to 40,450 on any pullback. Russell, still the next key magnet price on any rally in the Russell. Russell's really lagging. On rollover plays, Russell's the first thing I'm looking for. On rally plays, it's still the Dow and S&P. This 2197. Russell key support is coming back at about 2122 to 2125. The VIX still mid 15s. Nothing really talk about there besides, we're not really getting sell vol, buy it all yet. So the market's still slightly edgy, but getting very complacent very quickly again. The DAX, we could see easily a retest of this 18,780 level now. back above key support, back above the 62.5 on a closing basis. Now there's a huge amount of resistance up here. So the first target area on any longs, I'd be looking at about 18,550 to about 18,630, and then that 18,780. Notes in the consolidation, easier to see on the yield. With the yields, really nice favorite is triangle pattern. If you know how I feel about triangle patterns, but it is a consolidation going into Jackson Hole and Fed meeting minutes and a lot of Fed speak. So really, for me, we have to break above 4% on a yield basis for the 10-year before I can go with yields climbing, or close below 3.79 before I can get to yields weakening again. Other than that, it's no man's land. Yield 10-2s, still back to negative. Everything's hunky-dory again. Dollar index, the potential double, which never triggered or confirmed, now off the table. Remember I was saying, I'm still watching for this 101 level. We've now hit the second target. You can see here, if I move those lines out of the way, you can see second target right there, hit. So, still watching for rollover plays in the dollar. You see, every time it's poked in the rotation zone, there's been the set shorter rollover plays, and Friday was a very weak dollar day, following through today with hitting the next target. So probabilities are still for lower, not only because of the double, but again, it's closed below 62.5 multiple times, and the next targets both line up between the double and the 62.5 rule at that 101 area. Does not guarantee it. It's just two things line up in a cluster area. So as I mentioned last week, that's still the big focus in mind for the dollar index. Crude, we got a lopsided double bottom. Very lopsided. Lopsided doubles are lower probability. Not low, they're still above 50%, but they're lower probability. I'll still be watching that because it has not closed below 62.5 on the daily basis. So that could be for a potential pop back into a major consolidation area. That's only for a pop play only. That's what I'm keeping an eye on. Now, if we don't trigger the double and roll back down and close below 74.88, I'm watching then for a retest of the lows from the beginning of August. Gold. Coming up just shy of the next harmonic and pulling back, just stair-stepping higher still. Long term, still in bullish mode. Silver, still flagging up after hitting the first target. This we might only get back if it rolls over to retest that first target area. The only thing that shifts me back to short-term bullish in silver is a close back above about 330.40. Everything else is still either consolidation or rollover plays. What else? We have the yen. Was strengthening a bit earlier, weakening a bit in the last few minutes, but coming back down to test the key 50%. I'm really going to be watching whether we come back down and form a double or we hold this 50%. It just changes the targets, but that key area is the highs from last Thursday. You break above there, it's also above the daily rotation zone. Next target area then for me would be 151.81. If the yen continues to strengthen, I'm paying very close attention. Let me pull this line off real quick. There's a cluster, and the 62.5 of this up move is right around 144.50. All right, that's the key level on a closing basis for continued strengthening. Dell, let me just jump to Dell now before I forget. Dell, which still has earnings next week, next Thursday. after NVIDIA Wednesday. I'm just looking at Dell here. I'd probably still be focused on rollovers. Rollover plays. Next key target area I'd be watching on a continued rally in the earnings would be about this 119 area to 121. Right in here. You're getting overbought cycles at the top, but that's going to be key. This is not in a long-term bullish setup yet. So again, I'd be watching for rollover plays, but there aren't anything yet. I mean, it got to oversold cycles at the bottom trying to turn up, so this could easily continue to rally as long as we don't get a major tech sell-off into next week. But you're coming into a lot of key resistance area. So besides retackling the 50 magnet area, that's all that I'd be watching for the upside. Key support is now coming in roughly about 103.30. Spiders, magnet price is still 558.30 area. I'm really focused on Thursday's gap open price on any pullback, which is 549 roughly. Because you start breaking below that, we have the rotation zone below that, and we have the gap from Wednesday to Thursday. So if we did break there, I'd be watching for the bigger pullback to break to fill the gap, but that would just reconnect with the first cross rotation zone. Still magnet price, 87.5 level, which is 558.30. The Qs, still you have the gap from last Wednesday to Thursday. You have the rising rotation zone, so major support in the Qs is back at about 463.60 area. You did close above the 62.5 in the Qs, not with the futures yet. Futures are a slightly higher probability than the Qs, but the next magnet price I would focus on, the same comments as I said with the futures, would be that 75 harmonic, which is roughly 483.50. Bitcoin in consolidation, not much to talk about there. Ethereum, not much to talk about there. Correct, cryptos have gone to sleep in the short term. Yeah, there you go. Eggs are up 46.8%. Peanut butter's up 42.8%. Crackers up 40.3%. Yeah, stuff's just expensive. I don't know how a lot of people are doing it without taking on extra jobs and gig work and everything else. Everything. But now all these policies that are being proposed are pretty much inflationary. Price controls just lead to shortages, and I don't even believe why those are being proposed. NVIDIA closed above the 62.5 on Thursday, follow through a little on Friday. Next magnet price, remember earnings for NVIDIA are next Wednesday. Minor magnet price 128.24, majors 134.50. This could continue to go. It is overbought with cycles at the top, so we could easily see a possible pause, but you still got higher magnet prices in the short term for NVIDIA. I think that's really about it. Tesla, not much to talk about. Apple, has hit 226.92. No, it has not technically in double top territory. I was a little early with this one, but I bet you it does. This will be another one I'm keeping a very close eye on. Why? And this is on the left-hand side. I will go to the right-hand side targets, but this target area, we could see a potential if this were to trigger, which means we're getting a very significant sell-off. That's why I'll keep an eye on Apple also. could retest the lows from April. Going into the low liquidity open, there's not much to talk about. Support area in the short term about 55.64, 55.65. Got a little mini, maybe. Little sloppy. If it did, the only thing I'd start watching for a potential in the short term, a pullback play, is if we follow through on a 4-hour basis. If this sort of edging up, very sloppy double, which might be invalidated soon, closes below the low from last Friday, the low of 55.36.50, because that'd be out of the rotation zone on the 4-hour, and then we could possibly see that bigger pullback in the short term, which really wouldn't be that big a pullback, because again, the key support is 5,500 to 5,505. Yeah, it's 25% loss buying power. I want my money back. Get rid of the Fed. Get rid of a lot of this government crap. Get back to free markets and stop messing with us. That's all I gotta say. September is the largest historical for the markets, the largest historical down month. September, not October. September. So you are correct there, Coco. So, but a rate cut does not guarantee a bullish move. Remember, the market's celebrating it now, but historically a cut pattern triggers at least a short-term market top. Now, could it be different this year? We're also in an election cycle. So that's also to play there. You got a lot going on September, October, into the beginning of November this year. A lot. It's not going to be, that's why. Manage reward and risk and probabilities. Really manage reward to risk. Know where your stops are and targets are. And if something's going against you, take that loss. Do not try to do anything stupid to get out of it. Before you ever get in the trade, if you know your key targets and your stop levels, if you're not comfortable with that and you're not comfortable with the loss, you shouldn't be putting on the trade. Period. Especially at this time, and not just, you asked the question earlier about August. Yes, it's lower liquidity, but we're going into a potentially very volatile season. Period. And then on top of it, you have the Fed potential cuts or no cuts. You have election surprises. You naturally have the riskiest month of the year is September. And it's historical. We've talked about that many times in past Septembers. And I've also talked about the favorite time for me to put on hedges is September to mid-October. Doesn't mean you have to wait till September to put them on. If you can get good hedges cheap, especially after a rally like this, I structure them for portfolio protection from September to about roughly mid-October. Roughly the options expiration cycle in October. Because I, again, would rather give up some upside, and at least, you don't have to eliminate upside, but you can give up some upside for protection to the downside that you're going to carry for maybe, a month and a half. By the way, I'm on NinjaTrader at 11 a.m. Eastern. You're welcome, Anissa. So if anybody wants to tune into that, I'll be on NinjaTrader. And you already know my thoughts, though. So that's where we sit. I'll see everyone tomorrow, unless you tune into NinjaTrader, and I'll talk to everyone then. Bye for now.